Welcome back to AI Research, but less jargon. I'm looking at the London market today, and the big takeaway is that the FTSE 100 has finally shaken off its dinosaur reputation. We've spent years calling it an old world index because it's packed with banks, miners, and oil rigs, basically, the stuff that makes the world turn rather than the apps on your phone. But as we hit early 2026, that boring mix is exactly why the UK is winning. While US tech investors are sweating over high valuations, the FTSE just crossed the 10,000-point milestone. Let's look at the 5 fingers of market history to see how we got here. The 5 fingers of market shifts. Year, the event. What actually happened 2000? .com bubble. Even though the UK didn't have many startups, overvalued giants like Vodafone dragged the index down by 50%. 2008. Financial crisis. This was the big one for London. Because the FTSE is so heavy on banks like HSBC, the crash was deeper and more painful than almost anywhere else. 2015. Commodity crash. China slowed down, and because the FTSE is a miner-heavy index, it sank right along with the price of copper and iron ore. 2020. The pandemic. We lacked the big tech stocks that thrived during lockdowns, so our recovery was much slower than the US. 2025. Trump Trade War 2.0. The surprise: despite tariff fears, the FTSE outperformed the S&P 500, hitting record highs while others wobbled. Why did the Trump trade help London? You'd think a global trade war would crush an international index like the FTSE, but 3 things played in its favor. The dollar boost. About 75% of FTSE 100 revenue is earned in US dollars. When the dollar got stronger under Trump's policies, those earnings looked massive when converted back into pounds. The defense pivot. With the US taking a more isolationist stance, European NATO members started spending big on defense. That sent stocks like BAE Systems and Rolls-Royce into overdrive. Bargain hunting. Investors got tired of frothy US tech prices. They started looking for value, and the UK, with its pharmaceutical giants like AstraZeneca, became the safe place to park cash. The bottom line for your portfolio: the FTSE 100 isn't really a bet on Britain, it's a bet on global stability and raw materials. The buyback machine. Companies like Shell and BP aren't just sitting on cash. They've been buying back their own shares at a record pace, which puts a floor under the stock price. The valuation gap. Even at 10,000 points, the UK is still on sale. You're paying roughly $14 for every $1 of profit in London, compared to $30 in the US. If you believe that interest rates are staying higher for longer, and the world still needs copper, gold, and oil, the FTSE is no longer a dinosaur, it's a powerhouse.